Everybody was making money. Passive investors were making money. Sponsors were making money. We were all getting a little bit greedy. Then the market shifted. Hello and welcome. My name is Gino Barbaro, one of the co-founders of Jake and Gino. And in this important how-to, if you're a passive investor and you're looking to avoid mistakes when investing in a syndication, I want you to continue to listen to this lesson. It's crucial. Now, I'm going to share 2 mistakes that LPs, passive investors, make when they're aligning their interests, and 2 mistakes that sponsors make in this video. Now, if you want to reach out to Jake and Gino and learn more, if you see behind me, Jake and I have launched a program called Passive Investor Pro. And why have we done that? I've done it really for 2 reasons. Number one, I really wanted to create an amazing platform community inside of Jake and Gino for those passive investors. Jake and I are probably one of the very few educators out there that do not raise capital from their investors. That's not why I created Jake and Gino. We're not raising money from our students. Our students are raising money amongst themselves. And number 2, to piggyback off of that, I want to create really strong and powerful LPs. Once we have great LPs, we're going to have really good deals funded. But number 2, it happened to me. I was the passive investor early on. I made some really crucial mistakes. And these mistakes that I'm about to share with you, I committed all of them. And if I had somebody there teaching me how to invest passively, I would not have invested in this deal. I would have saved tons of money, tons of heartache, tons of reflection. And now I'm here really to empower LPs, because LPs have had it great up until probably a year ago. Everybody was making money. Passive investors were making money. Sponsors were making money. We were all getting a little bit greedy. Then the market shifted. Now passive investors are at the point that they want to blame general partners. And I think they can blame it. They can blame them. But at the same time, they need to take responsibility, as I did back in 2005. I was the one who stroked the check. I was the one who put my money into the deal without understanding it. Now, the first mistake, no return of capital clause to LPs, or a return of capital clause that doesn't return all of the LP money. Now, what do I mean by that? Back in 2005, when I invested with this gentleman, he didn't put any money into the deal. That was the first alignment of interest mistake, but I'm not going to get into the alignment of interest yet. I put all the capital in the deal. I should have been the one that was getting all the cash flow and all the money up front before he even saw a nickel. If you're seeing that the general partners are getting paid a certain profit without the LPs getting their money back before the GPs tap into it, if I'm going to do a liquidity event and I'm a general partner and I have this liquidity event of a refinance, I get all this capital back, I better be giving back all the capital to the limited partners first, and then splitting it between the limited partners and the general partners. You want to see that happening. Make sure that your LPs get their money first. The second one, I think this is truly important. Anything higher than a 3% acquisition fee as a percentage of purchase price is a little wary. I saw general partners back in 2020, 2019, 21, they were doing 4% at these really large purchase prices. 20 million, 30 million. I saw a sponsor at $50 million do a 4% acquisition fee. It's $2 million that the general partner team is getting paid. Now, do they deserve that? I don't know. Only the numbers will tell, only the track record will tell. But if you're looking at anything higher than 3%, just be wary of that. And I would also push back. As a limited partner, we just had a call yesterday with Jake and Gino amongst the students. We had our mastermind call every Monday. And what I thought was really telling was I asked all the students, does anybody, when you're talking to LPs, does anybody as a limited partner ask about fees? And he says most limited partners, the vast majority of them, do not ask. I'm teaching this to you as a limited partner. If you're going to be investing in someone's deal, ask up front what the fees are. There's other videos in the how-tos describing all the different fees. I'm not going to get into that. But if you see anything bigger than 3% in certain, now if the deal is $1 million and they charge a 5% fee, I understand that. But anything north of $3 or $4 or $5 million, anything bigger than 3% fee, just question it at the very least. And understand that, does that take away from the returns? Does it materially affect the returns? Now, this next one, what's the GP's business plan? What do they plan to do with the property? Is it vague, or is it not supported by enough details and data? Now, I've gone in previous videos talking about whether the limited partner needs to ask. And once again, on yesterday's mastermind call to Jake and Gino students, I was pretty shocked. Most limited partners don't ask for underwriting. They don't ask for a rent roll or a T12. They just, how else can I say it? They know, like, and trust the general partner team. You can't do that. You need to understand what's going on with the deal. You need to understand the assumptions. You need to understand the business plan of the general partnership team. Have they executed upon it? And that's, once again, why I've created this Passive Investor Pro. It's got coaching involved. If you don't want to do a lot of the heavy lifting, we can teach you how to vet a market. We can teach you how to vet a sponsor. Once you start getting underwriting and start getting deals, we have coaches one-on-one where you can bring a deal to a coach and the coach can walk you through the deal. And I think people, what they try to strive at is they're always trying to strive to get the right answer. What you're trying to achieve in life is you're trying to ask the right question to get the right answer. And that's what the coaches will allow you and teach you to do, is they'll make you look at the T12 and the rent roll and the assumptions. Well, how is it that we're getting 10% rent growth for the next 3 years? Is that possible? It's a great question. Let the general partnership team answer that. How is it that you're going into this market, you've never been in this market, and you haven't executed this business plan? How are you going to follow through on this? Another great question. That's why we've created this program, because we want to empower these limited partners. We don't want a person who has money just to throw money into the deal. We want to make them understand what's going on with the deal. They can absolutely, in my estimation, understand how to invest as an active investor, but then take a step back, learn the business, create the foundation, and then start implementing our 3-step framework of, remember, that was the sponsor, is the most important thing you need to look at. Then the saddle, which is the alignment of interests. That's the second part. And then the third part is the deal. Don't always be looking at the deal. You need to be looking at the sponsor first. That's why these sponsor mistakes are important, because you need to be able to pick out a good sponsor from a not so good sponsor. And you need to be able to align your interests with that sponsor. They can be the best sponsor in the world, but if they're in a market that you don't like, if they don't align with your interests or your goals, why would you invest with them? It's all about what that deal is going to do for you. Sometimes it's actually beneficial to be selfish. And in investing, you need to be selfish because you're going to be putting money into that deal for the next possibly 3, 5, even 7 years with the sponsor that has to run that deal. Now, this is my last one. And this one I think is truly important as well. And we've seen this ramping up over the last several years. When there's several GPs involved in the same deal, are they on there just to be able to coalesce and to try to bring as much capital? Or any of those general partners, anybody on the GP team have experience in running real estate? At Jake and Gino, we like to say we create multifamily entrepreneurs. Somebody on that GP team, and this is something where limited partners have to understand, will help you with this. You have to understand it and look at that team of general partners. You have to look at who they're hiring, or if they're using third-party property management or self-managing it. Who is asset managing the deal? Property management and asset management are completely different, right? Are they running the operations of the deal? Great, that's the property management side. The asset management side is the budget, is the schedule, is actually, increases in rents, making sure that NOI is growing, making sure that the GP is the steward, financial steward of that deal. So understanding the team members. You have 5 people on a team. Well, does anyone have any actual real estate experience? And ask the questions. And then what I would do to take a deeper dive, and I know probably 95% of limited partners don't do that, I'd love to see a list of all of your team members. Your property management, once again, your asset management. Who is the securities attorney that's putting these private placement memorandum together? How many have they done? Who's your CPA in this deal? Cost segregation. Make me understand what I get in terms of cost segregation benefits, because I'm not a real estate professional. How does that work? Who's inspecting the deal? Who's the closing attorney, the title attorney, so on and so forth. There's a list of people that you need to know as far as the team, and making sure that they have experience and this isn't their first deal really goes a long way. Now, as I wrap up this lesson, if you have any questions or comments, leave them down below. If you want to get a copy of Wheelbarrow Profits and start the journey on investing in multifamily, just email me, gino@jakeandgino.com. If you want to learn more about Passive Investor Pro and the programs that we have at Jake and Gino to teach people about multifamily, the number is 865-800-3905, or you can go to jakeandgino.com/apply. We're always looking for qualified people who want to start scaling into multifamily, who want to increase their holdings in multifamily. Multifamily to me has done an amazing job. It has completely transformed my life. And I think with the right skills, the right mindset, and the right accountability, it can do the same for you as well. Thanks for listening. Thanks for spending part of your day with me. I love talking about real estate and multifamily. Leave any comments below. Smash that subscribe button. If you liked the episode, give me the big thumbs up. I'll see you on next week's How To. Thanks for tuning in. If you enjoyed today's video, be sure to like and subscribe so you'll never miss another episode.